Hooty hoo, all my stock market gamblers. Welcome today. It's Wednesday, July 21st, and what a day it is. Stock market already up about 300 points. Now, it sure looks different than it did on Monday. Now, on Monday, we were down 1,000 points. Looked like we were going to have a down week. But me and you, we know the stock market only goes higher. Look for a new record high soon. Jerome Powell's going to keep printing that money. Now, what I want to talk today about is inflation. Now, hey, I don't want to be a channel that just reports negative news. I'm going to report good news. Anyways, inflation is over. Now, how do I know inflation's over? Well, Joe Biden, he says it's transitory. Do you believe him? Okay, well, if you don't believe him, maybe AOC. She says it's transitory. Now, if AOC says it's transitory, it must be transitory because, after all, she does have a degree in economics. And, of course, Jerome Powell, he says inflation transitory. But I'm going to tell you even better. Inflation is over. It's over. It's come to an end. That's correct. It's over. How do I know this? All right. So, Taiwan Semiconductor, they're the largest chip manufacturer in the world. Anyways, they are increasing chip production by about 60%, 60% over normal, 60% over the pre-pandemic levels. They are going to flood the market with chips. Now, where is inflation going to be over? It's going to be over in the car market. The car market's finally going to get chips back onto the marketplace. Okay, so these chips are coming onto the market. There's millions of cars sitting there that cannot be sold because they do not have the chips. It's a supply chain problem. The supply chain broke. Now, be very careful with supply chains. Pretty soon the food chain could break, have a little extra food stored up. But the supply chain broke for the chip manufacturers. Well, this is going to be flooding the market with chips coming back on. Taiwan Semiconductor is back on board. Not only are they back manufacturing chips, they are going to surge chips 60% more than normal to flood the market. So, okay, have you seen car prices recently? All right, car prices have exploded in the U.S. Look at new car price, the average new car price hit $44,000. $44,000 for a new car price. Why? Well, because people were paying $7,000, $10,000 over the list price. Oh, that's just crazy. Why were they paying that? Because they don't have any cars to sell. And, well, I guess the dealers were actually, let's not call it gouging. What should we call it? They were charging them a pandemic fee. That's what they were charging them. But they were gouging them $7,000 to $10,000 above the price that the car lists for. And used car market, have you seen the used car market? Oh my goodness, used cars are selling more than new cars. Why? Because you can actually get a used car, and there's the ones that are for sale are selling more than new cars. You can't get new cars, but this is going to change. They're going to flood the market with chips. So these millions and millions of cars are going to hit the market, and that's going to, okay. So what else happened? So when the supply chain broke, the supply of new cars went down. But what happened? The demand for new cars went up. Why did it go up? Well, because everybody's getting this free money. Free money. People want to spend the money, right? They want to go out and buy stuff. They want to go out and buy new cars. But there were no new cars to buy. See, this is what happens. This is what happens when you pay people not to work. They don't produce anything. You give them extra money. They want to go out shopping. So you got all this money chasing fewer goods and services. But I do think the inflation problem is over in the car market. Do not buy a car right now. Wait till November, December. These chips are starting to come now. They're starting to hit the market. These cars are going to be coming onto the market. And you're going to see a glut of them. We're going to go from no cars to too many cars. And we're going to go from lots of money to no money. So do not buy a car right now if you don't have to. If your car can last another 3 or 4 months, wait till November. Wait till December. The car market is changing. Inflation, and it might actually help the inflation numbers because I think those new car prices are going to come down to at least the list on the car. You know, I hate paying that list price. When you go into the dealership, they always have that sticker price right on the car. I hate paying that, you know. And normally you can pay about 3, 4, 5,000 below it, but right now you're paying 5, 7, 10,000 above sticker price. That is crazy, just crazy. All right, so I want to talk about the electric car market a little bit. Now, I don't completely understand this electric car market. I'll be the first one to admit. Now, I live in Silicon Valley. I mean, we got a lot of Teslas out there. There are charging stations for these Teslas everywhere. The people drive up and they plug their car in. They suck the electricity right into their car. Now, is this a good thing? People say it is because it's clean energy. Well, I live in California. Look at when it gets hot, you know, we have these things called rolling blackouts. Why do we have rolling blackouts? It's because everybody's putting the electricity into their car. We don't have enough electricity. That doesn't sound right to me. Now, I don't know the exact number. Let's say 10% of cars are electric now. What happens when it's 50%? And Newsom says we have to be 100%. I don't know what after 1930 is 2030. I don't know what the date is. I think it's 2035. We got to have everybody in an electric car. Where are we going to get the electricity from? We're out of electricity right now in California. I can tell you that because the power keeps going off. We have rolling blackouts. Why rolling blackouts? We don't have enough electricity, but everybody wants an electric car. I don't get that. The other thing I don't get, let's talk about oil for a second. Oil prices. Okay, so they're up $2 a barrel today. We hit a high of about 72. We came back to 67, and now we're at 69, up about $2 today. Now, if I'm OPEC, let me see. Do I want oil prices up high? Now, normally you would say yes. I want them to be $100, $200 a barrel, but I'm thinking, no, I don't want oil prices up high right now. Why? Because that puts gasoline prices up. When gasoline goes from $5 a gallon to $10 a gallon, people are going to want electric cars. So as you raise the price of oil, you're killing your own market. You're killing your business. Look at if the United States goes all electric vehicles, oil prices do so well for OPEC. It's not going to do well. No one's going to want to buy the oil because we don't use it anymore. Look at, okay, so oil prices, I do believe they're going to hit $100 probably later this year. They're at, right, this is called $70. They'll probably go to $100 this year, early next year. Okay, now, and a lot of that is not oil going up. A lot of that is the dollar going down because oil is priced in dollars, hence the petrodollar. So oil priced in dollars is going to be going up over $100 really soon because they're just destroying the dollar. They're destroying it. They just keep printing the money. Now, you know my opinions on that. I don't want to get into that. But I do want to talk about this debt a little more. Okay, so new cars costing $44,000. What's the average new car loan? The average new car loan goes for over $36,000. That's just crazy going out and it's like having a mortgage. I'm telling you, the average car payment on a new car loan, $563 a month. Now, I know maybe Americans have a lot of money right now, but $563 a month in the average length of the payment now. 70 months. Really? What happened to that 3-year car loan? It went out the door. Now, even the used car market, let's call it $25,000, and the average used car loan, $23,000. Now, apparently people have a lot of money for these loans, but you know what? They really don't. How do I know they don't? Because 15% of these car loans aren't being paid. Now, maybe in our state, maybe the governor will pay your car also. They're paying your rent. Why not have them pay your car loan too? Newsom apparently has a lot of extra money. But I'm telling you, 15% of loans are not being paid. Now, once the repo man starts repoing these loans, the used car market's going to be flooded with used cars again. So I do think that inflation is going to come down in the car market. I think new cars are going to come onto the market. I think used cars are going to be a lot of repossessed vehicles, and I do think that we're going to see the car market inflation come down. Now, maybe that will help the overall inflation numbers, but the debt numbers are they're just getting out of control. If you can try to get out of debt, there's some bad times coming. You don't want to have a lot of debt right now. It will bury you, I'm telling you. So inflation, this may help the inflation numbers. Temporarily. Why temporarily? Because they're destroying the dollar. Look at Biden doesn't know, AOC doesn't know, and Jerome Powell doesn't know. They say it's all intransitory. I say they're going to destroy the dollar by printing more and more and more money. Now, if you like this stuff, give me the thumbs up. It's Wednesday today. Get out there and have a great Wednesday. If you really like this stuff, punch that subscribe button so we can talk again soon. I'm Tall Mike. Bye-bye now.